So today I'm going to do my yearly update of the JKR Me versus Financial Education Challenge. So this is something I started 2 years ago where I thought I'd see how 10 of my best stocks perform against one of the biggest stock market content creators on the whole YouTube scene and see who comes out on top. And as well as that, I also compare it against the S&P 500 because obviously there's no point doing individual stock picking if we can't beat the S&P 500. So we started this around about 2 years ago and I keep updating it every year, and I'll also tell you today which are the new 10 stocks going into this challenge. So I hope you enjoy the video, guys. If you could hit the like button and let's get started. Now if you do like what you see, then join the Patreon and link is in the description. You can join through that link and you can get 2 exclusive videos a week from me, including the US portfolio review that I've just done on the Patreon, and you get to see all my positions, what I'm up, what I'm down, and what my sizing of my positions are. And you also get to know what I'm buying and selling in real time on there. £5 a month, the price of a pint, a link is in the description. So let's go back to 2022 when we first started this challenge. Now, if we look at what happened from 2022, at the moment, I'm currently winning with a 69% return. And that beats the market with an impressive 40% return. That's very good for the S&P 500. So I'm quite happy to be up that much, considering as well the strong performance from the S&P 500. Now, I do generally expect to outperform the S&P 500 in a bull market. So that is good to see. Just like if we're in a bear market, I would probably expect to underperform the market in a bear market. So what I always say that I expect to do is clearly happening here at the moment. That versus financial education's a negative 13% return, which obviously is not very good considering the strong year when you look at the S&P 500. If you look at financial education's picks, which are in the blue, you've only really got 2 out of 10 picks that are positive, which is definitely not a thing that you want to see. And there's actually 2 stocks there, Smile Direct Club and TTCF, that have gone bankrupt, which is definitely a very poor year from financial education. If you look at my picks, relatively pretty good. 6 of the 10 picks were green, and that's what we always say. If you want to have a successful portfolio, you need to have more winners than losers, and obviously getting 6 out of 10 is what you want to see correct. Ideally, I'd probably want a little bit more than 6 out of 10. 7 out of 10, 8 out of 10 is the normal target. But however, what you have here is you've had some really big winners. So the likes of DraftKings and, well, at Google, Celsius, DraftKings in particular, 178% return. Hims, which was up 255% return, and Meta, which is up 216% return. If you start hitting those kind of home runs, then it definitely makes up for some sort of losers. You know, if you got a loser of 25%, 45% is nothing really when you've got some stocks that are 2xing in that time frame, 3xing in that time frame. PayPal down, and S4 Capital that was down during that time frame. So yeah, overall I'm very happy with, from now that we've 2 years on from the 2022 challenge, that we are really outperforming the market. Now let's look at 2023. So for me personally, I think most of my stocks were actually very similar, whereas I think financial education was buying completely 10 different new stocks. So the only change for me, I think, was Mercado Libre came in, and I believe that replaced Celsius. Whereas for financial education, I think majority of his stocks were changed from that time frame. But if you look at from where we were a year ago in the 2023 challenge, my return was 22% and financial education's was 7%. So once again, I have beaten financial education in the challenge with over nearly 3x the return, which is very good. Now, the only difference is the S&P has actually outperformed both of us. It's outperformed financial education by a fair amount. For me, I'm around about 2% below the S&P 500, which is actually a little bit annoying because when I looked at this 2 weeks ago, I was actually outperforming the S&P 500. But I think during that time frame, there's been a bit of weakness with Hims and Hers, DraftKings, PayPal, and that's pulled my return down a little bit. I think until then, I think it was around about 27%, which is a little bit annoying with the timing, but it kind of shows you sometimes the volatility with a lot of smaller market cap stocks. But 22% isn't too bad. If somebody was to offer you 20% return a year, you'd probably take it. We're just a little bit behind the benchmark, that's annoying. However, considering that a lot of the gains in the last 12 months from the S&P 500 have been from the likes of Nvidia, if you do look at an equal weight S&P 500, it's only up 6%. So you got to take into consideration that a lot of the heavy lifting this year has been from Nvidia, and because I don't have Nvidia, considering that, if you do look at an equal weight ETF, it is a lot better than an equal weight ETF performance. So I'm going to take that into consideration. I'm quite happy considering that a lot of the rally in the S&P 500 has been like the AI boom at the moment. So not too bad from that point of view. But if you look at financial education's picks, he's done a lot better this year. He's got 4 greens out of 10 stocks, which is a bit better. However, obviously not what you want to see as an individual stock picker. You probably want to be more greens than reds. Looking at my stocks, I did have 1, 2, 3, 4, 5, 6 greens once again and 4 reds. However, the four reds were actually the exact same as the year before, funny enough. SAFCA was about break even, so that was actually pretty close this year. InMode was the worst performing stock this year, which is actually quite surprising. If you told me that at the start of the year, I would not have expected that. PayPal down 20%, which has had a bit of a tough time at the moment. And S4 Capital once again down 48%. So yeah, it's actually quite funny that my worst performers have been exactly the same from the year before to 2023. So that is how 2023 has done. So yeah, I'm happy that I've outperformed financial education. A little bit frustrating on the S&P 500 return this year. Maybe by the 1st of August, we are back outperforming after we've had some earnings from Hims and Hers and DraftKings. We'll see what happens when we come back next year. Now that leads us on to the 10 stocks for 2024. So this has only started since the 12th of July, so relatively new here. So I'm not going to look at the performance at the moment because that's only one day's performance in here. But the 10 stocks that financial education has is Nike, PayPal, Palantir, Meta, Honest, Win, Fubo, Cheesecake, and Tesla, which is very different from the last 10 stocks because these are all kind of like really big, like 30-40 billion market cap companies. And in fact, all of them apart from one, maybe two, make money. But compared to the last kind of couple of stocks, there was a lot more that don't make money. And even going the year before, there was a lot less stocks that made money. So there's definitely a turn of investment philosophies going on here for financial education. My stocks are basically, once again, exactly the same stocks. Once again, I've gone with Airtel, Google, Mercado Libre, DraftKings, Hims and Hers, Hollywood Bowl. InMode I've kept in. I feel like that if they can go through these interest rates, then hopefully they make it out the other side once these interest rates calm down. We'll see what happens. Meta, PayPal, and the only one that I've switched this year is S4 Capital. I have taken S4 Capital out of my selections because financially they've had about 2 years now not performing very well. And I would, even though it's been a tough time for them, I would hopefully see some financial improvement from them, which I'm not seeing at the moment. And I have not actually bought the stock for nearly a year and a half now. I thought it was a good time to maybe take that one out and put it into the doghouse a little bit. Knowing my luck, S4 Capital will go and get bought out or something like that. But what I did is I did switch that one for Card Factory. Obviously, you guys know I've been quite actively increasing my Card Factory position, even that I've owned the stock since around about 2020. Still recently, I've been actively buying the stock. And as well as that, I do actually get a 4% dividend yield from that stock. However, we don't in fact factor dividends into this competition, but it's probably worth pointing out there. So yeah, overall that's the updated one for the 2024, and obviously we'll come back in summertime 2025 and see how we're all doing. Obviously from this, I'm quite happy with how my performance is doing. I wish I did have Dark Trace in here. That would have been obviously really good for my returns if I did include Dark Trace in here, which I think I was quite close to adding into here considering how aggressively I was buying that last year. But yeah, I'm quite happy to be, a relatively smaller YouTube channel with quite low subscribers and to be very much outperforming one of the biggest stock market channels out there on the stock market scene. With the S&P 500, yeah, I'm really happy with, how I would expect it to happen is that when we have a very good year, I would expect to outperform the S&P 500, which we had in 2022. 2023, obviously still a very good performance, even though we are slightly behind the S&P 500 at the moment. I think with a solid earnings from DraftKings and Hims, that will probably put me back above it. And considering that a lot of the S&P returns from the last 12 months have been from the likes of Nvidia, when you look at the equal weight ETF, that's only up 6%. 22% is far ahead of that. So I'm quite happy with what's going on this year, considering the whole AI situation. And then 2024, we'll see what happens. I'm hoping that it'll be another good year. And like I said, we'll come back in 2025. And by then, the 2022 numbers will be 3 years in, they'll be 2 years in and 1 year in. So we're starting to really build a big historic database now, so you guys can track how I do against probably one of the biggest stock market YouTubers out there, and also the S&P 500. You know, a lot of people, you know, want to hold you to account. That's the whole point why I started this, is that you can hold me to account now, and you can see how 10 of my big stocks do perform against the S&P 500 and how I perform against other YouTubers. And right now, looking at that, yeah, I'm really happy. I feel like I am holding my own at the moment, and kind of sums up how my personal account's going. The last 2 years in particular have been very strong for my personal account, and it's been going very well. So hope you enjoyed the video, and we'll do another update in another year's time and see how we've done again, and hopefully we can make it 3 years in a row of doing really well. So we'll see what happens. Hope you enjoyed the video, guys. If you could hit the like button, if you're new around here and you enjoyed the video, make sure you subscribe, and I'll see you in a bit.